Now, if you have $100,000 to invest and if you're looking for ideas, today's video is especially for you. I'll be doing this discussion in a few key parts. The first is I've actually invited a friend of mine to share a bit more on what he thinks, because I posted that question to him to get a bit more insights and a bit more flavor to share with you. That's the first part. The second part, I'll be sharing with you briefly on what I bought most recently. But again, not investment advice. The third part, I'll be sharing with you also where I'm allocating for private clients. And lastly is what investment analysts are suggesting right now, a particular hot sector. So if you're keen to find out, continue watching. Hi guys, welcome back. Without further ado, let me share with you what I've discovered listening to Alvin's point of view in this discussion. But this film, I actually did some slight mistakes. I angled the camera wrongly. What happened was I told him last minute, hey, let's do a quick filming. I would like to post something, to add more flavor to this video of mine that I'm doing for you right now. So without testing too much on angles and audio, I actually did the record and the angle didn't capture in well enough. So my apologies to it, but I think it still has very good nuggets of wisdom. So let me play that clip for you to listen in.
You covered Tencent, you covered PopMart, you covered Capital DC very recently also. So I have this question, if you have an extra 100,000, what would you really buy like right now so everybody can listen in and stuff?
Hi, I'm Alvin. I'm from Dr Wealh. Right, so sometimes I cover a certain stock is because I think that people may be holding the stock or they may be interested to hear some views. I may or may not have the stock, right?
So any of them that you covered, you really own right now?
I do have Capital DC.
Okay.
Right? I do have Capital DC. I do have PopMart. I do have Tencent. Right, so these are a few that I may hold, right? But that's based on certain strategies I do. Like for example, Tencent will be based on more of a growth strategy, right? And then Capital DC will more of a dividend play and a bit of growth. Because you look at Capital DC, the yield is not as high as a lot of other REITs. So there is some growth element in there. So it really depends on the strategy. So if you ask me now what strategy I would actually favor would be a momentum strategy.
Okay. Elaborate.
And the reason is because we have seen S&P 500 gone up like 20% for the last 2 years consecutively. It's a very rare kind of event. And a lot of stocks, if you take a look, especially the more well-known one, the AI story ones, they are very overvalued, right? So if you use a typical growth approach, when you do a valuation, you'll find that, hey, you cannot buy one that kind of price. So end up, you have the extra 100,000 you cannot deploy, then you stay in the cash. I think may not be a bad idea, but if the market continue to run, which we don't know, right, whether it will, if you don't want to miss out, and I would think that at this point in time, a momentum strategy makes sense because it doesn't care whether it's overvalued or undervalued. We have seen a lot of overvalued stocks continue to run up a lot, right? So momentum will capture that. I think it's a very good time to look at momentum strategy.
In momentum, that means you have to understand when the momentum turns, right?
Yes, correct.
So it's not buy and hold passive kind of approach.
Correct. Yeah, that's a very good clarification, right? Because momentum is a short-term strategy.
Yes.
Momentum typically lasts weeks to months.
Okay.
It rarely more than a year.
In bull markets, you can deploy such an idea.
Correct.
Okay.
But the important thing is that, yes, as you already pointed out, you must know when to exit. A lot of problem with investors is that they know how to catch the hot stock, right? Because hot stock is exciting, right? But they don't know how to exit when the trend turns, right? So you need to use certain exit signals, one of which could be like a moving average, right? A more technical analysis, but a moving average will trend up together with the share price. If it goes up, they'll be in parallel. But if the price starts to go down, the moving average is slower, right? It's a lagging indicator. So the price, once it goes below the moving average, that's the point where you exit because there's a chance that the trend has collapsed.
Okay. Yeah. Even to that point, of the three that we named, quite possibly Tencent is out. Now they have this blacklisting and they corrected massively. Then it's probably only PopMart that would have that momentum that you are describing.
Yeah, but again, momentum, the best way to do it is not just to look at a stock by stock basis. Right? Okay. Another mistake that a lot of people like to do is that I like this group of stocks. Let me see which one have momentum, right?
Okay.
That's not the right way to do it. The right way to do it is that you screen the entire universe of stocks and see what are the stocks that have high momentum at this point in time. Then after that, you buy near the top, those top ranking ones, which may or may not be stocks that you are familiar with. Yeah. So that's how you capture the bull market and know where the momentum of the market is.
Okay, maybe you can give us a bit more depth.
Yes.
Because we have answered it, quite broadly.
Yes.
What will be some names? Maybe not like exact ones. So we don't directly make a buy or sell recommendation.
Yeah. We can even use an ETF for example, right?
Okay.
There's a ETF that do momentum on S&P 500. They
Okay.
pick out of the 500 stocks, they pick the 100 most with the highest momentum scores. Right?
Okay.
So some of the names inside, I just saw it this morning, like of course your Nvidia, your Amazon, your Meta. These are the 3 that are in the top 10 holdings. The other 4 not inside. The other magnificent 4 not inside because the momentum score is not as high, right? Especially we know Apple.
Yes. Apple's the only one that has recently did a 20%
yes, correct.
correction.
So some names like this. So if you can also do momentum on index that you're familiar with, like the S&P 500, the big cap index. So that's easier for the psychology, right? To buy stocks that you know. So that momentum ETF, the ticker is SPMO, and it has done 17% per year, beating the S&P 500 since 2016. That's a good 9 years. Right? So they're doing 17% per year. So you can see the momentum actually can enhance the index performance.
Let's pull up the comparison again. For SPMO, which is Invesco S&P 500 Momentum ETF, against S&P 500, you would realize that the blue line has outperformed tremendously actually in 2024. So this outperformance over the last 5 years is 50%. So does momentum investing work? I think sometimes it does, of course, but there are also periods maybe that it might underperform. At the bottom line, I think you must be comfortable with the strategy and it's something you believe in. That's more important than looking at past performance. As to why there are difference in performance, maybe we can analyze a bit on top 10 holdings. I'm curious to find out also how has this evolved from 1 year ago. I will be doing some investigation to it, so as always, if you're keen to follow on, smash the subscribe. Once I have new information, new investment ideas, as always, I'll share with you on this very channel. Thank you very much, and so happy to have 60,000 subscribers. I really appreciate each and every support that you've given. So again, a big thank you. So let's go back to this top 10 holdings. Who do we see atop? Amazon, Nvidia, Broadcom, Meta, and Berkshire Hathaway. I bolded next on JP Morgan, Eli Lilly, Costco, Walmart, and General Electric. Actually, the top few names are quite predictable, right? They are the ones that are surging up right now. Big tech as well as semicon industry. But it feels to me that they have very big allocations to individual names. S&P 500, which I'll show you later, they are actually a lot more diversified. It's 500 companies, right? Then the next part, financial names, JP Morgan. I think JP Morgan's weight, the S&P 500 is way smaller, like 1-2%, something like that. Then there's also other names such as Walmart and GE, which have 2+%. But what do you realize in this top 10 holdings? Do you see Apple? Do you see Microsoft? I think the reason is because the two of them, if you were to pull out the chart, you realize that they are negative in momentum, correct? So this momentum ETF has eliminated them. I don't even see Tesla inside, surprisingly. So this momentum ETF, hopefully is something interesting for you. And let's compare it against to S&P 500. Just now I say it's a lot more diversified. We can prove it right now. You'll see atop Apple, Nvidia, Microsoft, Amazon, Meta, and Alphabet. Alphabet is also missing from SPMO. So very interesting choices. The allocations to financials is way smaller in S&P 500 versus this SPMO. Let me know again if you have questions on it. Now let's move on to the second chapter where I'm putting my money. I've done previous videos on them and they're all searchable within my channel. I bought recently on PropNext. I bought recently on Google. I've actually bought on PopMart, who owns Labubu. I think they're executing their global strategy very well. I do see that they can actually continue this momentum for the foreseeable quarters ahead. I've bought more on Ethereum ETF. I've bought more also in Solana coins. These two are in the crypto space, which I cannot directly advise, but it's my personal view that right now, there seems to be some tailwinds to them. So these are areas I'm putting my money towards. See just as investment ideas and do your own calculations. With that cleared, let's move on to where I'm allocating for private clients. If you're looking for fee-based advisory on retirement, look for my links below. Investment management is the second part of where I deliver value to clients. The first part of what I do is actually to give a lot of clarity on what they need to do in terms of getting retirement income. A lot of times, investment questions are actually retirement questions because how to invest 100,000 for someone who is young and at the start of career is very different from how to invest 100,000 for someone who is near retirement or at retirement. The considerations for cash flow, the consideration for volatility is totally different. That's why I didn't give you one straight answer, buy this stock. That's not how I view investments and that's not how I preach proper investing in a lot of ways. So again, if you're looking for fee-based advice, look for links below and get in touch with me on a one-to-one basis. Back to my point on how I'm allocating for clients. Inside it, I'm giving you big hints as to where I think are good value areas. You see that in terms of equity to fixed income allocation, I'm putting 80% into equities and 20% into fixed income, which are short-term bonds right now. Long story short, I'm saying that 20% should be kept as war chest cash. Markets have ran out for 2 years already. Yes, we should stay invested, but probably it's not time to go all in. In terms of the equity allocation, you see that I have global allocations of 13%, emerging markets of 35%, and US at only 25%. I'm underweighting US right now, preferring to allocate towards India, which has corrected recently, and to also Japan. This again is a diversified approach that builds up a portfolio for retirement and to give an investor enough exposure into equities. And I will be rebalancing this every quarter. Now let's move on to the second chapter, which is what investment analysts are recommending. I think one of the hottest topic right now is undoubtedly investing into semicon companies. I'm sure you've heard of news of DeepSeek, and it's actually caused a correction in semiconductor industry. And it was actually just after I shared my concerns with private clients in this newsletter. If you're not too sure which stock to buy, there are actually ETFs that focus on this sector. One of the most popular is SMH, which is VanEck Semiconductor ETF. Not SMH for shaking my head as a slang. SMH for VanEck Semiconductor ETF. What do you realize when you pull up this chart over here? You realize that it's outperformed S&P 500 also, and even at a bigger margin. Over the last 5 years, it will have done 254%, which means $1, you have made $2.50 of profit. S&P 500 only did 84%, which is fantastic already. So quite clearly, this is a high beta exposure. Right now, the market is riding on semiconductors. And before we get too far, I'd like to again highlight risk, which is back in 2022. There were concerns of economy slowing down, and that's why S&P 500 had a bear market of 20+% loss in 2022. SMH dropped on the other hand more than 40% when it's a high beta volatile exposure. To make sure it fits your risk appetite. So what exactly is in VanEck Semiconductor ETF? We would see right at the very top Nvidia, TSMC, Broadcom, ASML, and Applied Materials. All semiconductor players. All of them in one way or another part of this semicon value chain that is producing data centers now for AI, and they buy from one another as part of this value chain. I'll explain more in a while. Analysts are suggesting that based on their growth rate, their earnings per share, their high valuations are justifiable. And moving forward, it's foreseeable in the next few quarters that this growth rate is still very strong. Expected forward price earnings at this growth rate could reach around 23 times only, which could suggest they are not overvalued. And just in case you're thinking, wow, this is a great ETF to buy. How to do even better than that? Maybe the next answer could be to look at individual companies, right? What if I buy Nvidia? What if I buy TSMC? Last 1 year, you realize that both of them outperform S&P 500, outperform SMH by a big margin. Which means again, these top two names are pulling everything up themselves. Why not just buy these two top names, correct? Hopefully you have gotten a hint. I'm trying to put it more extreme. I'm trying to show you again that when it comes to investing and when it comes to thinking, 100,000, where best to invest? I think very often we look at past performance and get comfort from it or get uncomfortable with it. We need to understand what has driven past performance and we determine whether there is still room for that to definitely continue. At this juncture, I would like to instead give a contrarian point of view. I would think that chasing Nvidia and TSMC right now may not be the best idea. It is a very crowded, a very heavy investment idea already. Everybody is pouring to it. Almost all private client portfolios I pull out with individual stocks have Nvidia. It is no longer a secret. In my eyes, it's no longer a safe trade. Let me explain how everybody is linked up. The start of Nvidia can actually be associated with the drive of AI and data centers. I'm explaining from my layman interpretation. If you happen to know a bit more, leave in the comment sections below. I'm trying to simplify for everybody to understand what has gone on before we look at past performance and extrapolate it indefinitely. Let's start with TSMC first. TSMC is actually the world's biggest manufacturer of semiconductors, and recent performance has been stellar. You would realize that I've boxed up myself fourth quarter They've delivered 26.36 billion, which is record quarter, and it boosts total revenues for 2024 to a new high. Who does TSMC sell to? They sell to Apple, and of course their next biggest customer is Nvidia. When Nvidia has orders, they'll place some with TSMC, which means also Nvidia booms, TSMC will boom. Actually, TSMC also makes orders from ASML, so they're all linked up in this value chain. I'm trying to explain to you where the order flow comes from, which could show hidden risks moving forward. Nvidia has gotten great orders themselves, and if you pull up their revenue chart, you realize it's even more spectacular, correct? End of 2023, that surge up has been like a rocket. That's why Nvidia has captured everybody's imagination and grown so substantially to become the world's most valuable company right now. At this juncture, some in big tech are even complaining. Have they transferred big tech's revenue and profits and shareholder value towards semiconductor too far or not? Because as you can see, Nvidia has gotten big orders and they have been ramping up revenue and profitability. Again, these orders, they translate to TSMC, correct? Therefore, the graph direction is the same. Both of them have market leadership anyway. So once we understand this, we need to ask the next question. How come Nvidia's orders are so strong? Who is the one making all these orders? The answer, if you don't know already, is actually big tech firms. Amazon, Meta, Alphabet, and Microsoft. Take a look at this big tech capex spending. You will realize in 2024 that has jumped, correct? Simply because of AI. Actually, it can be attributed to Microsoft's purchase of ChatGPT and their desire to dominate AI. They are the ones who have kickstarted this massive spending to AI, and everyone in big tech is just being pressured to follow them. The growth in 2024 was huge, and this 227 billion of spending, some orders of course flowed to Nvidia. Then again, Nvidia orders from TSMC, TSMC makes more orders to ASML, etc. The entire value chain was kickstarted by big tech's capex spending. If you have learned something, help me smash the like button. It's taken our team hours to produce this for you. Thank you very much, and I'll next review to you the next concern that should be on our minds as investors. What if big tech does not pour more towards this capex spending? Or what if they start to cut back down? Because the reality is AI is still a futuristic product. The revenues driven is not able to cover this spending. It is all a lost investment for future returns. At some point, they have to stop pouring monies towards it, correct? It cannot go on indefinitely. In fact, Microsoft is one of the worst performing big tech firms because, in my opinion, they've poured a lot towards AI and it hasn't driven them growth yet. Microsoft is the one that started this AI spending. Microsoft could be the one that leads a cutback on AI spending also. Recently, they've announced that their forecasted one-year spending will be $80 billion. A huge amount, but if you look in terms of percentage-wise, it looks like a plateauing. Next question that we need to ask is if Microsoft slows down, or will the rest still be so pressured to keep spending that big? Would that lead to slower Nvidia sales, which trickles down the semiconductor value chain? That is a real possibility that could happen, and that's why in my opinion, the growth in semiconductor cannot be expected as indefinite. There will be some phases of digestion, even if AI were to become very big in 5-10 years time. There are bound to be periods of oversupply that will lead and trickle down to lower sales in the semiconductor space. So now I've hinted that maybe not a good time to buy the semiconductor space. My personal opinion, if it skyrockets 2 times, I don't have a crystal ball. Don't come back in the comment section. Say, it skyrocketed 2 times. I'm giving you my interpretation free of charge right now, and you make your own decision whether it makes sense or not. Thank you for watching right to the very end. Leave your questions in the comment sections, and as always, if you're looking for a fee-based advice, look for links below, and I'll invite you to this previous video I have, which touches on retirement planning. If you're keen to hear more insights on retirement planning, check that video out to learn more, and I'll see you there. Take care and goodbye.